Guys, today we got the first batch of 2025 housing data. I want to share that with you, and this is something you should pay attention to. I'm going to show you how to use this for your local market so that you can dig into your local numbers so that you can keep up with this yourself. But this is a listing agent's dream. We also got the first inflation report this morning. I want to share that with you, and also the 10-year treasury, what's been going on there, because the 10-year treasury, if you haven't figured it out by now, directly affects mortgage rates. Okay. And also, I just finished my 8th edition of the 90-day action plan for real estate agents. So at the end, I'm going to give that to you for free. It's a complete 44-page blueprint, including steps and scripts and strategies and the whole 9 yards. You can have it for free. I'll share that at the end. So about a week ago, it was Tuesday, we had this job opening number, this report come out, and it literally crushed the market. It actually wasn't bad, but they accounted this to inflation. There was 8.1 million job openings, okay, at the end of November, and that's an increase from the 7.8 million seen in October. And ever since then, the stock market literally has been crushed. I mean, yesterday was really the first day that was kind of, leveled out a little bit. And then after today's CPI numbers, okay, so the core inflation rate, this is this morning, slows to 3.2 in December, and it was actually a little higher. If you look at a chart here, you can see that the overall CPI was up, okay, it went up to 2.9. But when you exclude food and energy, it was actually down just a tad. Okay. So the highlights of this was the consumer price index increased seasonally adjusted 0.4% on the month, putting the 12-month inflation rate at 2.9. The annual number was in line with forecast. So that was good. It was in line. The core CPI annual rate was 3.2%, a notch down from the month before and slightly better than the 3.3 outlook. So that was better than expected. Then shelter prices, which comprise of about 1/3 of the CPI weighting, rose about 0.3%, but were up 4.6% from a year ago, the smallest one-year gain since January 2002. Okay, so the stock market futures surged following this release, and the stock market has been doing well ever since. The 10-year treasury also came down, which is a good thing. So when that job openings report came out last Tuesday, 10-year treasury shot up. And so the first 2 days of the year, the stock market did great, because the last week or so of the year of 2024, the stock market did horrible. And that's, I believe, because people were selling off, taking gains, taking losses, etc., which is kind of normal at the end of the year. And then when the year started back up, we had 2 really great days. There were 2 really great days in the stock market. Then we got that job openings report, and the 10-year treasury went up. And so we started out the year about 4.6. It was like 4.9, 4.57, 4.59. And then it shot up, right? And it peaked out at 4.77. And right now we're down to 4.66. So the mortgage rates themselves, they're sitting at about 7.25 right now. And this report and what's going on and everything is not really, I believe, going to affect mortgage rates at all. We won't really know, because mortgage rates don't shift, in real time. So we don't really know how all this is going to affect mortgage rates. I don't think it's going to affect it much whatsoever. But the real fact of the matter is that mortgage rates are about 7.25, and I mean, that's as high. That is up there. And I expect that we're going to see, this range. I don't see this changing dramatically anytime soon. So we need to kind of prepare for that and get, used to that as real estate agents, as consumers. There's about an 80% chance, from what I can tell across all the different reports, that the feds are not going to change their Fed fund rate at all at the end of this month when they have their meeting. They're just going to kind of keep it where it is and kind of see kind of where it goes from there. The real estate, now look at this. We have our first 2025 data here. So this green dot right here, this little bitty green dot, is the beginning of these lines here are 2022. The black one's 22. The orange one is 24. The blue one is 23. And this green one is going to be 25. And so we're just starting it right here. And so if you look at new listings, we're down. New listings hitting the market, we're down 2.5% from last year. Okay. So that's not really what I want to see as a listing agent. Okay. But when I look at active listings, okay, active listings were up 10.5%. Now, I like that number. Okay. I like that number. If you look at sales, I like this number, sales. And these of course were under contract before the end of the year. They closed within the last couple of weeks. We're up 10% from where we were last year. So sales are starting out 10% higher than where we were last year. That's a great thing. When we look at pending deals are down. We're down 3%, which isn't massive, but I think that's due to the rates, the mortgage rates coming back up, getting into the low sevens. And so that's kind of why I believe that's where we are there. When you look at median price, there's no surprise here that we're up 5% because we ended the year last year. Well, let's see. Look at there. We ended the year up 7%, from the same 4-month period. In 2023 to 24, we're up 7%. And so we're starting out the year up 5%. When you look at these 4-week, periods, and they're basically going year over year here. When you look at this, let's see, what else do we have? Months of supply. This is up higher. So we're at 17.4 weeks of supply, which is, what's that? 4.5 months, something like that. 4.5 months. That's getting really close to a balanced market, which is what you want. I mean, that balance, and we're not even there yet. We need more supply actually to hit that. And I think we actually will hit that, this year. I think we'll get into the 5, getting closer to 5. That's really kind of where you want it to be. It's really a perfect market where you have a beautiful, you have beautiful numbers and stats and data to show sellers, to kind of show them where we are and what we have to do. And then you've got on the buyer side, they're not in a hurry. There's not multiple offers. Like, it's really kind of a perfect world for real estate agents. And I know we all got used to multiple offers and all this craziness, and like, we're upset that things aren't selling in a day now and everything. But when you really look at this and realizing that, listen, closings happen every single day and will happen every day for the rest of your life. Like, quit worrying about how quick things are selling, and just focus on helping people do exactly what it is they want to do. When you look at days on the market are up. Guys, don't look at this like this is horrible thing here that the days on the market are up. It's okay. Days on the market, again, we're sharing this data with our clients, right? It's giving buyers more options, which is what we've needed, right? Because as agents and as buyers, and even sellers who want to upgrade, we've all complained about no inventory for years. And now that inventory is growing, it's like now we're complaining things aren't selling quick enough. I mean, you got to look at the bright side of all this stuff. As we continue to move towards a more balanced market, guess what? You're going to get more listings because the sellers are going to have places to move to, right? They're going to be able to move into their dream homes, which is what they've been wanting to do, but nothing's been available. Well, guess what? Now things are going to be available. Okay. We're moving into a beautiful, beautiful market. And we had to have that down year last year to get to this point where now we're not quite there, but we're getting there. And you should be all in on your business right this second so that you can take advantage of it. What other data points that I want to share with you today? The median, the sales price, I shared that with you. The median listing price, right? It's also high. We're up 4.54% from where we were this time last year. And you can see these curves, how they go. They kind of just shoot up from here. Let's see. What else do we have? That's the main parts of the data. Now to dig into your local markets, you just go right here, right? So go to this link here, redfin.com/news/data, /data -center. I'll put that link in the description for you, but you just go here and you can just put in your county or your region. Like, it doesn't have the very small towns and stuff, but it does have all the counties. So you can kind of look at your county, look at your region, look at your metro area. Right here, you can change it from metro to county if you want to look at different areas. But, let's look at Miami. Miami, Florida, right? And then it has all the data, all the same data. If I want, it doesn't have Gulf Shores, Orange Beach, my area. Let's see. Orange. Yeah, it doesn't have it. So what I have to do is switch to county, and I just go to my county, Baldwin County, Alabama, and then boom, I've got my data here. Let's look at my area. So let's see, what's this? Median listing price, we're up 2%. New listings, about where we were last year, down 1%. Median sales price, we're down 6% from where we were at this point last year. So you see how different the different areas are? You got to dig into your local data. Okay, because nationally we're up 5%, but we're down 6% in my county, which is kind of like, a lot of different areas, but it still gives you kind of a more accurate, look at what's going on. This is active listings. We're up 10%. I'm happy with that. Because think about it, as a listing agent, you want more listings in the market. That means there's more people listing, and that's what you want, more listings. I mean, if you want more listings, you want to be in a market where more people are listing their homes and inventory is growing. That is what you want as a listing agent, because look, closings are still happening every single day, right? Don't get caught up in how long it's taken these properties to sell. When you list a property, you're not just listing a property, you're creating a lifelong relationship with this property owner. That's the way you should look at it. Like, if it takes the property 5 months to sell, that's very insignificant in the 30 years you're going to do business with that person. You shouldn't be scared to communicate for 5 months through a deal with this lifelong client that you're going to have. Get used to this client. Get used to communicating with them. Get used to telling them what's going on and advising them and helping them and understanding what they want to do. Don't look at this like it's, oh God, they're going to be mad at me because it's not selling. No, all these properties are taking a long time to sell. Median days on the market. Look at this. Median days on the market, 81 days. All right. Year over year, that's up 25 days from what it was last year. I mean, okay, that gives me an opportunity, guys. An opportunity. I see that as a huge opportunity. The slower properties are selling, the bigger the inventory I can grow, the larger the more listings I can stack, the longer things take to sell. Why you want? Why are you going to stack a bunch of listings? And just not sell them? That doesn't pay the bills. Yes, okay. Go out there and get you a stack of listings. Go out there and get 20, 30, 40 listings and tell me if you can't pay your bills. You're going to be making so much money, you can't spend it all. All right. You're not going to have money problems if you go out there and stack a bunch of listings. You'll pay your bills just fine. Okay. All right. Most people that say that online, whenever I say stuff like this, I can go ahead and tell you they've never listed a bunch of properties before. They don't understand how this works. And that's okay. That's okay. Active listings. Let's see. We looked at that. So anyway, yeah, you can go here and mess around with this and find your area, and just to kind of keep up with your local data. You should also be looking at your MLS every single day, looking at the new listings that come up, the new pendings, the new close, the expireds, all that stuff, so that you can keep your finger on the pulse of your local market with the specific properties, not just the data. And you can also find data in your MLS. You should also be Googling different data points, like Google your area, and then Google Miami Lakes real estate stats, and then see what articles, see what companies are producing real estate stats for your area, and save those in your favorites and go back to them from time to time and take a look at them. All right, I just completed the 8th edition of my 90-day action plan. It's 44 pages. You can go to zerotodiamond.com/90 to download this for free. And I'm doing a Zoom call Monday at 3 p.m. Eastern. I'll also put the Zoom link in the description below, so that you can be a part of that, because I'll just go through this with you and answer any questions that you might have. But this is a complete guide to take your business from 0 to $1 million in yearly gross commissions earned. This is the 8th year that I've done this. And look at the table of contents. I've got it all laid out here. It's laid out in 3 phases. Right. And if I get down to, I got the ZTD principles, I've got your startup kit. Phase 1 is lead gen. Phase 2 is lead conversion. Phase 3 is lead retention. And I've got the 6 steps right here. I help you put your schedule together right here. I give you all kinds of strategies to find buyers. Here's the handwritten letter. I give you examples. I tell you how to follow up. I tell you what to do each day of the week. I give you some tutorials. I mean, it goes on and on. There's a lot of graphics. I break everything down here. And this is the best one yet because I didn't have the ABS formula put together and I didn't have the $1,000,000 formula ironed out before I made this. And then I get into the scripts and strategies. So here are all the scripts and strategies right here for what I feel like is the best strategies in today's market. So anyway, I'll put a link in the description for that, 0todiamond.com/90. And also the Zoom call Monday, 3 p.m. Eastern. Looking forward to that. I hope this video helped you in some kind of way. I appreciate you. Let me know in the comments, and we'll see you on the next video.